Good morning. I'm Peter Milios from the Finance News Network. Stocks slid on Thursday as Wall Street passed commentary from Federal Reserve Chair Jerome Powell while monitoring a key milestone for a closely followed bond yield. Powell noted that inflation was still too high and would likely require lower economic growth, while also noting recent data showed progress towards slowing prices. He also said that monetary policy was not yet too tight. Powell stated, incoming data over recent months show ongoing progress toward both our dual mandate goals, maximum employment and stable prices. But in any case, inflation is still too high. A few months ago, good data are only the beginning of what it will take to build confidence that inflation is moving down sustainably toward our goal, he said. Investors appear to take away that the Fed would likely keep interest rates unmoved at least at its next policy meeting. The market is pricing in a 99% chance that the central bank leaves rate unchanged on Thursday, up from about 93% a day prior, according to CME's Group's Fed Watch tool. But market participants are left unsure of how or if the Fed would move rates in the longer term. Overall, the Dow Jones Industrial Average shed about 0.8%, the S&P 500 and Nasdaq Composite lost 0.9% and 1% respectively. Rising bond yields also weighed on the market. The benchmark US 10-year Treasury yield notched a high of 4.996% on Thursday, inching closer to the well-followed 5% level that was last crossed in 2007. After Powell's remarks were released, the yield hovered near that high. Elsewhere, traders also passed the latest earnings reports. More than 15% of companies in the S&P 500 have already reported this season, according to FactSet data. Of those, more than 74% have surpassed Wall Street expectations. Electric vehicle juggernaut Tesla slid more than 9% after the company missed analyst expectations on earnings and revenue in the third quarter. CEO Elon Musk also warned that the company's Cybertruck will not produce much positive cash flow more than a year after production starts. Netflix shares, on the other hand, jumped 16% after the streaming giant posted third quarter earnings that beat estimates. The company got a boost from strong ad tier subscriptions. Beyond technology stocks, AT&T climbed more than 6% after beating expectations for the third quarter, while investment firm Blackstone slid 7.9% on a weaker than expected report. Overall, all US sectors except for communication services finished lower. Real estate was the worst performer. The SPY futures are pointing to a 0.6% fall. Thank you for listening and have a great weekend.